There's two possible ways how you found this video. You either searched for the Horde cryptocurrency, or you're simply just a subscriber that watches every single video of this channel. For the first people that searched for Horde, that already found different videos on the topic, this video is likely going to have most data, most in-depth hidden data of any kind of video. So if you're gonna watch this video and you're considering to buy Horde or to reinvest into Horde, with the information of this video, you're very likely going to make a more refined decision of how much to invest, if to invest at all, and how stable the overall project is. Now, for the people that have never heard of Horde and that simply just stumbled upon this video is discussing a cryptocurrency project with Ponzi scheme like tokenomics. Okay, so I'm very transparent here. This is not just your random DeFi project. This is ultra high risk, and the likelihood of actually losing all of your money, or at least most of your money, is not very low. Okay, that being said, Horde is relatively specific. It's relatively special in the overall market. It has some interesting tweaks to it, some interesting spins to it that generates quite a bit of attention. So it means you might be getting into something, in case you buy Horde after this video, you might be getting into something that's very high risk in reward, but that might also be high in risk. So, make your judgment call on this. And I hope with the data of this video, you can make a more refined decision overall. So let's dive directly into the data. Let's dive into the details. So here are the charts that I was mentioning before. So I've done quite a deep dive into the stability of the Horde project. Let's step back first and look at what actually is going on here. So first I want to start with a disclaimer. So the website is deb.horde.games. I personally have 2 plots in this project, so roughly $2,000. So there is a conflict of interest here. If you invest in this Ponzi scheme, then your money will be partially my return as well, right? I'm very clear about this. I tried to be very, very objective on this channel, and I tried to present the data here in a very objective way, but simply be aware I do have a stake in all of this. Now, what is Horde? Horde is a DeFi system that takes money on the one hand, does a bit of magic in the middle, and then distributes the money on the other hand. The system is similarly set up to strong block. So you buy a node, or in this case it's called a plot, for 10 tokens, for 10 Horde tokens. Each Horde token costs roughly $100. So buying one of those plots is $1,000. When you've got such a plot, you get paid out 0.1 Horde token per day. Okay, so you initially invest $1,000, you get $10 back every single day, which then means you need roughly 100 days until you recoup your investment, right? It's actually a bit more than 100 days, because when you sell, you pay a tax, a selling tax of 10%. So in reality, you need a bit more. You need 110 days on average. Now, why do I say on average? Because the price, it's not necessarily always exactly $100. There's actually an algorithm that sells the token when we are above a certain bound, and that buys the token when we are below a certain bound. And that's the whole idea. That's the unique selling point of the Horde cryptocurrency project. The idea is you've got a passive income DeFi project where you get paid every single day, and you don't have the price fluctuation risk that much, because we trade within a band. So you can pretty much rely on that period of that break-even point when getting into this system. Now, that being said, there is obviously massive risk. Now, one thing first to mention, I forgot to say this. These plots that you buy here, they don't pay out returns forever. They actually decay. So after 300 days, you don't get any return from this at all anymore. So you put in $1,000 and after 300 days, you get roughly $3,000 back. Then you would have to buy a new plot, a new node, if you want to continue staying in this system. Now I'm simplifying a little bit because there's several different plots. There's also the $500 plot, the $100 plot. They are a bit less attractive though because they decay a bit faster. Now, where's the risk here, right? When it's not price risk. The risk here is the stability of the price peg, because what's happening here is that there's a wallet balance that makes revenue when we are at the upper bound, that loses money when we are at the lower bound. Okay, so that's one way how that wallet, it's called the liquidity manager, wins and loses money. There have been updates to the project that fill up the liquidity manager even if we are not at the upper bound. So when you create a plot, some of that money will go to the liquidity manager. Same is true for the sales tax. So there are movements to the wallet that stabilizes the price that are outside of just selling the token when we are high on the bound. Now, what we want to know is how is the balance of this liquidity manager wallet actually developing, right? How long can this trading range be sustained? Because if it can't sustain it for at least 100 days, then we suddenly break the peg and then you will have lost all your money. That's the problem, right? Or you will have at least lost all the money that you haven't claimed up to this point and converted back to stable coins. That's a big question. How stable is the trading range? When will the depegging, so to speak, happen? And that's now where all of these charts come into play. This here is a chart. It's roughly 1 week old. So I published this for the premium members a week ago. The link here is down below. It's also in the video description if you want to become a premium member. You can also ask me more questions around this. This is the development in dollars of this liquidity manager. So we can see it sometimes went down. This is when the trading range here was at the lower bound, and it sometimes goes up. That's when we are at the upper bound. And so initially there was way more demand than selling pressure. The liquidity manager got more and more money. The balance increased. Then we got some special event where they moved money into the liquidity pool. So this was not really a loss of funds or so. This was just a tokenomics update. The same is true for this recent increase over here. That's when some kind of treasury money was injected into the liquidity manager. So these two special steps, I think also the special step over here, they are not really related to the price mechanism. These were artificial interventions. Still, what's interesting around this is that so far the price stabilizing mechanism, the wallet, is not losing dollars, right? So this is positive. In US dollar terms, the system is getting more stable. Now we want to dive deeper here, right? And so I've got, of course, way more charts. This here is the daily issuance value. Now, what does this mean? When you've got a plot, right? Every day you get $10 as a payout, 0.1 Horde tokens that you can then convert into BUSD if you want to. So this is increasing over time because more and more plots are being created, are being bought, and they haven't yet decayed, right? It takes 300 days for a plot to decay. So far this is a monotonically increasing function. On the x-axis, if you're wondering what this is not the number of days, this is the number of hours. So I've actually made snapshots of the blockchain every single hour in order to compile this data. So one data point is 1 hour, and this is the lifetime of the project since inception up to 1 week ago. This is how long the project has been alive so far. So we can see currently at this point in time, it's roughly 130,000 US dollars that are issued, denominated in Horde tokens. So it's 1,300 tokens roughly. And so with this increased payout, you do want to know what pressure is potentially building on that liquidity manager wallet, right? The more payout there is, the less impressive the wallet balance is. So instead of measuring this liquidity manager balance, or I call this here the runway in dollars, let's measure this in terms of daily payouts. So let's divide this chart here by this chart. Then we get the runway measured in daily issuance. So what this means is if there was no new money entering this Ponzi scheme, then after roughly 11 days or so, the liquidity manager would run completely dry. But because people are still continuing to enter the system, this is not going down that much further, right? We're pretty much now stable to a certain degree. But the question on how this is developing is your answer to, will this price pack here stay alive? When this number goes to 0, the price pack will go down, it will break, and the whole system will collapse. Now, initially, we saw quite a bit of a decline, but there is now, with the tokenomics update, with more money flowing from the sales tax and from the node creation to the liquidity manager, with those updates, we can see this has stabilized. And I find this actually pretty impressive given the current bear market we are in, right? And given the overall risk aversion. It's interesting that a DeFi project can still attract capital while there is somewhat of a crypto liquidity crunch. Now here's the next very interesting chart. And this shows how many tokens have already been issued versus how many tokens are there in the reserve pool. Okay, so at the beginning, there wasn't a lot of tokens yet being issued. We just launched, right? And then more and more tokens are getting issued. So this is cumulatively. And this is, of course, rising faster and faster because the number of nodes is increasing over time. When I got into this project, we had roughly 4,000 or 5,000 nodes. Actually, I can find this out directly. So I bought node 5,922 and 5,923. Currently, we are at 13,600 plots. So the project has roughly doubled in size since I joined all of this. And because of that, the daily issuance of tokens is going up, right? It roughly doubled during that time. And so when you add up all the tokens that had been issued so far up to this point, this is growing faster and faster. Now, when you create a plot with those 10 Horde tokens, 6 of those Horde tokens are used for the rewards pool. At least that was the state when I did my initial analysis here. This might have changed slightly, but it's roughly 6. So 6 go to the rewards pool, meaning this is the money entering the system that's being paid out to existing investors, or that's at least ready to be paid out to existing investors, right? So the green money, or the green line, is the money that's flowing into the system, and the red line is the money that's flowing out of the system, measured in Horde tokens. So as with any Ponzi scheme, you want more money flowing in than money flowing out. Once that shifts and not enough people join the system anymore, then the whole thing breaks, right? Because you can't pay out the existing base of people anymore. So what's really important here, and this is another way to look at this, and this is, I think, the most fundamental way to look at this, is how is this delta here developing? Is the system attracting new money fast enough to ensure the existing base of holders? At some point, this has to break, right? Ponzi's can't grow forever, and getting into all of this is simply just betting on the idea that this will grow enough that there will be more people coming afterwards to make this a profitable thing. Now, the question is, are we already in a turnaround? As in, are the payouts already outgrowing the inflows? So let's take the top line, the money that's ready to be distributed, the Horde tokens that are backed by BUSD, and subtract the tokens that are being issued to holders, see if we currently grow quickly enough. So let's look at the delta here. That's the next chart, and that's what we see over here. And this is also, I think, very, very interesting. So a few weeks ago, I was actually quite bearish on the project. I didn't make a video on this yet. I don't want to trash publicly on a project if I don't have to. I was obviously showing this to the premium members, but I don't give every single update that I give to those subscribers also on YouTube. Now that the thing has turned around, I think it does make sense to also share this publicly. So what we can see is that the delta is increasing. So during this bear market, via the use of those tokenomics updates and via a few more implementations. So they've also started selling NFTs. That didn't have too much of an impact, but the main impact was the allocation of new node creations to a liquidity manager, and was also the launch of those smaller plots that incentivizes compounding and reinvesting. Those were the main points that moved the needle here. I found it interesting that the team was able to pull this off, to keep the outflows and inflows at some kind of a balance. Ideally, you want to see this further increase, right? This is measured again just in tokens. I have not prepared the chart that takes this overall delta here, right, and that divides it by the token issuance pace. That would actually be an even more representative chart. This would actually probably go down slightly, maybe not even that slightly, it might go down even more, but that's kind of like the data I want to show, right? Currently, at least, the system seems to be somewhat stable. The liquidity manager seems to not decline too quickly, measured in daily issuance. In US dollars, it's of course going up, and the outflows, they are growing faster and faster, which is very important to note, right? Some people get this backwards. A Ponzi scheme gets more risky with time. It's not getting safer with time. So you need to get more and more money entering all of this. And at some point there's a break point where there's not enough money and these two lines cross and the thing explodes. Most people have this backwards because they simply reason by analogy, right? They see, okay, one cryptocurrency project has been around for 5 or 6 or 7 months. It's better than another cryptocurrency project that has been around for only 1 or 2 months. The 1 or 2 month is obviously more risky, but that's not true for systems with these kinds of tokenomics. If you invest into Olympus DAO or into Strongblock, when it has already been around for 1 year, it's way more risky than when you invest in this when it's been around for 2 or 3 months. So really, if you decide to get into this, you are betting on this thing to further rise and outpace this red line. And this becomes harder with time. But so far, it worked just fine, right? So far, the inflows pretty much matched the outflows in terms of number of tokens. Now, what do you do with all of this information? Should you buy this? Should you get into this? This is an answer I cannot give you, but what I do hope what this video gave you is way more information than what you have seen in any other channel that has discussed this project. So if you want to get more information like this, if this was valuable, don't forget to subscribe. A like, of course, would be appreciated as well. It would help the channel grow. And feel free to also check out our Telegram channel. Simply search for Bitcoin Strategy channel within the Telegram app. And as mentioned, this is the premium membership, thebitcoinstrategy.com. It's currently $49 US per month. You can reach me there directly. There's obviously also a lot of exclusive content. More information around this can be found on the website. There's also a video which discusses the tokenomics of Horde in more detail. So that video is over here. Hope to see you in that, and thanks for watching this one. Bye bye.